Dan McGookie, and welcome to this week's version of Foreclosure Stories, a series of videos that we have been putting out for several weeks now, meant to educate people about their mortgages in this day and age of securitized mortgage lending. And by that what I mean is where loans are bundled by the thousands in a trust or a loan pool, and the bank in charge of your mortgage does not have any ownership interest in your mortgage, and in fact, to make matters worse, has financial products which pay off upon foreclosure, making foreclosure profitable. This week's story is what we've called Call Your Bank Out. It's a story of Tammy, who I visited just in the last couple of weeks, and she came in with a very familiar story, something we're seeing more and more often. She is, again, a victim of what we call a false HAMP denial. That is a situation where the bank has an obligation to offer her HAMP, which is the acronym for Home Affordable Modification Program. The bank has an absolute legal obligation to offer someone HAMP who qualifies, and yet we see it all the time where banks don't do that because, as I said, it is profitable for the banks to foreclose. In other words, the banks do not hesitate to violate federal law and in the process cut off many people's ability to stay in their homes with good loan modifications which would allow them to save their homes. Now, in Tammy's situation, she was going through a divorce. She had obviously a reduction in her household income. She had 3 young kids, and she found herself in a very desperate situation. But even beyond that, in February of this year, 2013, she was able to raise $7,000, which was the full amount of what she owed on her loan, all the arrearage. Now, despite that fact, she offered that amount to her bank, but despite that fact, the bank said, no, we're not going to take the $7,000. Why? Because the bank claimed that she owed another $3,000 in legal fees and costs. It had filed a foreclosure action against her a month earlier in January of this year. Now, in what I would call the traditional banking system, before securitized lending, now this would be a no-brainer. The bank would say to someone like Tammy, okay, that's fine, pay that $3,000 over a period of time, or it would have maybe tacked that $3,000 onto the tail end of the loan. But not so in the day of securitized lending, as I said, where it's profitable to foreclose. So, when Tammy first came in to see us just a few weeks ago, it was obvious that she was a victim of a false HAMP denial, meaning that she qualified for HAMP, for federal mortgage relief under the HAMP program, and yet her bank wasn't offering it to her. We pointed that out to Tammy. She was very pleased and visibly could see a sigh of relief, knowing that she's not going to lose her home in foreclosure, knowing that she and her family and her young kids are going to be able to stay there. One other thing about Tammy's case is that she has an FHA insured loan, and we see this often too. It's a highly technical but very important requirement, which I've never seen followed yet by the banks, and that is that they must offer the homeowner a face-to-face meeting to resolve the mortgage issues prior to filing foreclosure. If the bank does that, then the case must be dismissed and it's a complete do-over. Now, in Tammy's case, we're not looking for a do-over. We're looking for the HAMP mortgage relief that she is entitled to under federal law and that we will achieve for her. So the lesson in this story is be aware of your rights under federal and state law. Chances are there's many relief programs. There's a relief program out there that you would fit into, and yet the bank is disincentivized from offering it to you. So education in this area is key. Thank you for visiting with us this week on the Foreclosure Stories, and look forward to seeing you next time.